The S&P 500 just printed a record 13.1% profit margin right now in Q3 2025. This is the largest the profit margin has been in the last 15 years. This is the seventh straight quarter the margin has increased for the S&P 500. Now, most people think that the market's collapsing because there's a supply chain issue, tariffs, and there is a demand issue. Yes, there is like a there is like an unemployment issue, but most people think those are the problems and companies aren't making money. Wrong. The company's profit margins are the highest they've ever been in the last 15 years since the global financial crisis. So, in this video, we're going to be talking about who's really driving this growth and how you should position yourself. Now, why should you listen to me? I was mentored by the Institute of Trading and Portfolio Management ex Goldman Sachs traders Anton Creel and Edward Scheck, and the portfolio manager of Dragonstone Capital, based out of Singapore, managing $3 billion. In addition to that, I have completed multiple specializations and have also created my own algorithm which is running in the markets, which has generated me over a 7,500% return over the last 15 years, all of which you can find in the bio. So, if you look at this graph, you can clearly see that the three big winners is information technology, obviously, utilities, and financials. All these sectors have higher margins than what they had last year. And our biggest losers in terms of margin loss is healthcare, energy, and communication services. Now, this tells you that even with tariffs, geopolitical problems, companies still have pricing power. This is why inflation stays sticky. This is why earnings don't collapse, and this is really why the S&P keeps creating new highs. It's all driven by earnings, and your profit margin is a huge factor in that. By Q2 2026, people expect corporate margins to hit an average of 13.7%, which is the record all time high, which is totally insane. So, guys, you just have to keep this in mind. As the margins go up, the earnings go up too. It doesn't break the S&P 500. Yes, there is like a huge valuation problem right now, and emerging markets is a better bet, but we aren't going into a bubble right now. Guys, this is the reason why information technology leads. The margins they make is absolutely ridiculous. These companies have insane pricing power and insane demand. Everyone thinks companies are getting crushed by costs and tariffs. It's quite the opposite. The corporate margins are expanding big time. Factor this into your investment ideas. As long as margins hold up, earnings hold up.